According to Global Wealth Report 2016 by Credit Suisse Research Institute, world has $256 trillion worth of assets. Now, people invest in various forms of assets, from machinery, equipments, arts, gold bars, or real estate properties. Majority of these assets are illiquid, difficult to subdivide or transfer, and are mostly transacted via paper trail. However, the way we invest in these assets is going to change with the arrival of blockchain. These assets can now be tokenized digitally. Asset ownership is slowly beginning to move from analog to digital, and this is highly disruptive. Hello everyone, in my second blockchain interview series, we are here with Alexandre Kech and going to understand about the asset tokenization. So first of all, welcome Alexandre.
Well, thank you.
Alexandre is the CEO of Sequoia-backed Singapore-based blockchain startup Onchain Custodian. He has more than 20 years of experience in capital markets industry. Alexandre was earlier head of securities and FX markets, APAC at Swift, and was responsible with his team for strategy and product offering in the Asia Pacific region for the securities and FX customer segments. He has also wide experience in fintech engagements in the APAC region with a particular focus on blockchain for securities and FX. So over to Alexandre. Alexandre, can you tell us what does asset tokenization mean to you?
Okay, so asset tokenization, in my view, is the ability to make liquid assets that are not necessarily liquid today and make them accessible to a bigger variety of customers or investors. So the challenge that exists today in the financial industry, but in other assets investments in general, being real estate, being fine art, or anything other similar, is that very few investors have access to those assets because it's complex to put in place, it's complex to distribute, and it's complex and it's expensive as well. So with the tokenization of those assets on the blockchain, or a portion of those assets on the blockchain, what we open here is we open doors to more investors to have access to those type of assets, and for those assets themselves, so for the issuers, the ability to reach to a broader range of investors.
Okay, since the concept of blockchain is not very clear in general people, in such situation, how do you think general people can start investing in tokenized assets? Don't you think it is currently limited to people or institutions who are blockchain practitioners?
Well, I would, at this stage, it is effectively the case because this opportunity for tokenization is known from the people who are not only familiar with the financial market industry, but also the blockchain industry. But at the end of the day, I think, and I can explain a bit more how it works, but the ultimate objective is that this becomes completely invisible to investors. They shouldn't know that there's a blockchain behind the scene dealing with the tokens and making sure that the tokens they have are unique and that their ownership is recorded as unique. That should be just a detail. But at this stage, yes, it's still very relevant to explain how it works. So the way it would work generally is, let's take the example of a real estate, for example. And there are a few examples out there, like an Aspen resort recently in the US that have been partially tokenized. The idea is to take, let's say, for an investor that needs to raise capital to build a real estate, what he would do generally is go for private equity type of companies or banks that would provide him with the liquidity he needs to make to pay for whatever he needs for the real estate investments. The idea here is to take a portion of that, like 20%, and open it up to the public in a way, or more investor types, through tokenization on the blockchain. So what does it mean? It means that a legal structure like a special purpose vehicle would be created, so a company representing those 20% of the real estate investment. The shares in that company would be tokenized to be distributed to investors. It would be distributed on the blockchain, meaning that the blockchain would play the role of the bank the registrar, all the people that are needed today to make sure that when you buy into that token or you buy into a share of this real estate investment, you are uniquely you are the only one owning that share, and that's blockchain is very good at. Blockchain is very good at distributing, I would say, digital assets and making sure that the owner of those digital assets are effectively the real owner, that those digital assets are not duplicated or copied and distributed to other players without the knowing of the issuer. So that's really the idea here, is to use a technology that is strong at identifying ownership and apply it to existing assets today.
According to you, which category of assets in market is very easy to be adopted for tokenization? I mean, which do you think is the most readily being picked up?
Okay, so I think it's going to be all about illiquid assets that are very complicated today to distribute in terms of investment. So real estate is a very good use case because it's a complex process. Today, if you want to invest in real estate, the only thing you have to do is buy an apartment or something like that. You can't really invest into a high quality asset in New York, for example, or elsewhere in the world. So tokenization helps with that. Fine art as well. So for example, nobody would be able to invest today in a Picasso because unless you're very rich. In my case, I will invest in a Picasso very soon, as I shared with you at the conference, because tokenization allows me to do so. And it's a good investment because obviously those type of fine art always gain value over time. A Picasso will always take 5 to 10% per year in most, and assets like that are interesting to invest in, but very complicated to invest in. Tokenization makes it possible. Other assets would be startups. So that could be used as a capital raising mechanism for startups that are, for example, in the Series B, Series C type of investment capital raising that they need. Instead of going for VCs, venture capitalists to raise funds, or instead of going to a bank for a loan, or instead of going IPO because they're too young to go IPO, they can issue securities tokens that represent shares in the company at an early stage, and reach out to qualified investors or other type of investors that they would not be able to reach out today. The other advantage, of course, of tokenization is that once those assets are issued in the form of tokens, they become they easier to exchange. So you can, if you want to exit an investment that is represented by token, you actually just need to find a buyer. Can be OTC, over the counter, or on an exchange, and there is a structure that is being put in place as we speak to enable that to happen.
Now you mentioned about startup funding, and I believe that token funded startups will become more common, and that traditional venture investors will have to be open to investing in tokens. However, we keep hearing about not so serious projects and also ICO frauds, and then funding level debate on STO versus ICO. What do you have to say about this?
For startup funding or capital raising, I think STOs, in that case, securities tokens, are the solution. So we've seen a lot of attempts or experimentation last year and the year before with ICOs, so initial coins offering, which were not securities. So you didn't own a share into the company. You were owning a right to use the service in the future. This has led to a lot of problems because of lack of transparency, as you shared before, but also those projects were not necessarily very serious. Some of them were serious, but many were not really serious projects. With securities tokens, they have no choice because securities tokens are securities, so they are just falling under the securities and futures regulations that countries have. They need to be properly managed. They need to be a prospectus that explains the purpose of the capital raising, what is the company objectives, etc. And this can be audited through parties like us, for example, custodians. Once those tokens are issued or once the capital is raised, custodians like us can prove that if they said in their prospectus or white paper that 50% of the capital raised would be kept in escrow for future investment as from 2021, for example, we can prove as a custodian that it's effectively the case, that the capital raised in Bitcoin or Ether or stable coins is effectively locked into an account and will not be released before 1 year, 2 year, when it says that when they said they would release that money. So there are ways today with infrastructures like custodians or traditional players that are going into the space of and the application of securities laws to the securities token issuance to make sure that the transparency is there, the legal structures are there, and the serious is there.
So Alexander, how do you see the realization in adopting asset tokenization in global market, especially in framing regulations?
I would say that as we are going, I think we're going into a direction where more and more tokenization investments are getting closer and closer to what capital market would require. So the fact that we now start talking about securities tokens, which for which the existing laws and regulations applies, is a good thing. It will allow not only the crypto early users and crypto believers to do what they want to do with that industry, tokenization in a more understood framework, legal framework, and it will also allow traditional capital market players such as custodians or banks or even exchanges to start playing a role in that crypto space. So, and what makes that possible is actually clear regulation, clear rules, clear best practices on how it should be done. And I think we should be happy about the fact that there are more and more it's certainty around how tokenization should be taking place.
What are the major challenges which need to be overcome if tokenization and broader token economy are to take off?
I think the challenge that I see two challenges is the lack of regulation in some countries. So the absence of clear indication on how the market will go in certain markets, like in the US, it's still very unclear, although the SEC is becoming more and more persistent on what they want to consider securities and what they want to consider other cryptocurrencies and so on. But that's why we like to be in Singapore. In Singapore, MAS is always pretty much clear on the direction we want to take. We know what we can do, we know what we cannot do. We know when we need a license, we know when we don't need a license, and that's what is needed in every country. So once regulation will be clear for everybody, I think that will be a first hurdle that will go away. The second one is still the lack of infrastructure and serious infrastructures. So there are 200 exchanges or 300 exchanges, crypto exchanges out there today. Very few of them are doing properly their job in a way. They either not regulated and doing they trafficking even their trading volumes to make them more attractive to their investors. So there's some lack of regulation there to make sure that those exchanges will work properly. And there's a lack of custodians as well, and that's why we are entering into the market infrastructure play. For an asset manager, a traditional asset manager, to invest into any assets, they need to have a custodian to manage those assets, and that's the law. So these big asset managers like BlackRock and others, for example, will not start investing. The real institution will not start investing until there is a clear custody structure that they can rely on, and that where they can hold their assets. So these are two: lack of regulation or lack of clarity around regulation, and the second one is the lack of infrastructure.
So why do you think with asset tokenization we need dedicated institutions like Onchain Custodian, which is providing dedicated custodian infrastructure?
Yeah, so I think it really applies here to institutional investment. So it depends on whether this industry wants to have true institutional investors going into crypto and tokens in general. If it's the case, you cannot expect an asset manager or a fund or another investor into crypto who are buying millions of crypto every day, different tokens, or investing into startups through their tokens issuance, to hold those assets in a USB stick that they put into a safe at their office. These are that cannot work. So for the security purposes, custodians focusing on preserving and securing the crypto assets is already a first reason why a custodian is needed. Second, the crypto exchanges. Crypto exchanges are being hacked almost every 2 weeks. You have news in the press. This crypto exchange have lost 20 million. This crypto exchange has lost 40 million. The biggest one was 2018, a Japanese crypto exchange that lost 500 million of US dollar because of bad custody of the assets that they manage for their customers. That's another reason why custodians are needed to support the crypto exchanges in cold storage of the assets that they don't use on a daily basis. And why custodians would do that better than an exchange? Because custodians only do that. That's their job. That's their core business, is securing assets. Exchanges, their core business is to trade and intermediate buyers and sellers, not to do custody. That's why they do it not very well, to be honest. So if everybody has a role to play in this industry and plays and focuses on that role, I think the industry will be way better. Custodians are there to focus on securing the assets of exchanges, securing the assets of investors, offering value-added services on top of it if they can, and that's why custodians are quite important in this space.
So Alexander, is there any globally defined security standard for custodian infrastructure, especially when this space is very nascent?
Okay, so who should they choose in fact as a custodian? Yeah, so it's a new industry, and which has been talked about for the maybe 1 year and a half maximum. So there are quite a lot of new players, and I understand that question. It's not necessarily easy for an asset manager or a crypto fund or a family office who invests in crypto to know which one to choose. The good news is that the industry is organizing itself. So there are groups called, for example, the Global Digital Finance Group, who has a custodian working group, and that group aims at defining best practices, code of conducts on how custodians should behave. That's for cryptocurrencies and utility tokens. For securities tokens, it's easy. For securities tokens, custodians need to have a license in most countries. And the license that they would have is the same that any custodians for equities, fixed income type of assets would have. So assuming that you're talking to assuming that you have securities token to have in custody, to put in custody, there you just need to look for licensed custodians that will be better, that will be well placed to do that activity for this type of instruments. So it's a mix of self-regulation through groups like the GDF and others, and licensing for securities token that will help investors choose which one they should be taking as a custodian.
Well, government in India is not very clear about crypto and its regulation framework. Therefore, crypto trading is banned here in India. So what do you have to say about this?
I think I do like the Singapore approach. Mm-hmm. So the Singapore approach is, so MAS, the regulator in Singapore, is what we called a regulates only based on risk. So it's a risk-based approach. So when there is a new thing coming in the market, like crypto or utility tokens or whatever, ICOs, they look at the risk it has on their citizens, Singapore citizens. So are Singapore citizens going to be protected from fraud, etc.? And generally that would be the generic commercial regulation that would apply. And is there a systemic risk on the capital market or the banking industry or the finance in general? If there is no such thing, if the risks are low, they will leave the market react and grow as it should. And then when they start to see a beginning of a risk, that's only then that they will try to establish new rules or adapt existing rules. So in the case of India, I think it would be great if they would be doing the same, is trying to let it go as an experiment, waiting for a critical mass to take place, and at that point, with the knowledge that they've acquired by observing the markets, and of course they need to educate themselves and talk to the players on a regular basis. So it could be SEBI, for example, the securities regulator, that could have a look at that, or the central bank. Once they've educated themselves in understanding how it works and the impact it can have on the industry, then they can either revisit existing laws. That's what Singapore has done for payments, for example, to apply it to crypto and cryptocurrencies, and potentially revisit securities laws to apply it to securities tokens.
Thank you, Alexander. Thank you so much. I wish Onchain Custodian a very great success. Thank you so much.